Hello and welcome to another episode of Talks with the Tax Cop. I am none other than Patrice L. Berry EA. Y'all see that on the screen. I am aka the Tax Cop. Glad for you to either tune in or look. Anybody who looked at the video and you're like, why did she take so long to move? I just wanted y'all to absorb my intro. I really did. We're gonna work on our when Alice there comes home for the break from his first semester away at school. I'm gonna get him to give me some jazzy, funky like beats, so it'll go with my personality. Nothing wrong with what we got now, but we gonna level up as we adapt, create some new stuff in this space. All right, y'all. So, I was about to sound like a preacher and be like, I'm not gonna be before y'all long, but this week we're gonna break some stuff down. It's actually some of the same information that I am sharing with my team. Correct? Yes, that probably came on the screen and y'all saw that. And I was like, what? She need to fix her stuff. Anywho, I'm gonna share some of what I've been sharing with my weekly tips that we started, right? My weekly tips from the Tax Cop that come directly to your mailbox. If you want those, let us know so that we can add you to our mailing list so that we can get you stuff directly to your email box every Wednesday morning, so that you can absorb it. But for those of you who've never gotten an email from me, who only tune in, who only listen in Podcastville, or who only come on and look at us on YouTube, I'm going to break this down. So some of this stuff is going to sound repetitive if you are already on our mailing list, but we're going to hit it and we're going to hit it home because it's a topic that people talking about. It's going to end up on the news. That there's two topics that people are going to talk about, and they're going to end up on the news because they hot topic. Hot topic. Like, we need a hot topic. Hot topic is making me think of Hot Pockets. Y'all, I'm hungry. Right now, I'm drinking a juice. I'm not sponsored by nobody. So I am drinking a juice from the Raw. I've done a 3-day detox by them before, except for I didn't do it in 3 days, right? And on my meeting days, I need to make sure that I get something in my system. And so what I did was I got a vitamin C booster combo from them. So Juice from the Raw is not sponsoring me. I'm just letting them know Juice from the Raw is not sponsoring me at all, but I do actually like their juices. It's convenient. We do have a juicer here at home, so I do make my own juices. But when I'm not really trying to clean up the kitchen or anything like that, this little brand right here been doing me good. This one right here is called Detox Greens. I actually prefer the sweet greens better. Detox Greens got pineapple, celery, cucumber, green kale, spinach, dandelion. Y'all, we not at Sponsorville, but Juice from the Raw, I like your product. It gets me through. It gets me through, and I do truly appreciate it. So if you see me sipping today or you hear me sipping today, that's what I'm sipping on. Sipping on some juice. Detox Greens. All right, that's my commercial moments. Y'all, I'm trying to get into it. So the two topics that we're going to be talking about today, we're kind of not necessarily being our audit and awe or balancing the beat type thing. Like, we're not going to follow our themes like that, but we are going to talk about what's happening in these tax streets. We are going to focus on the who got a report for fencing. That's what I call it, but y'all hear it called BOI, right? Anybody who's heard my we in a 3-part series in our email, it's fencing as far as I'm concerned, right? But we're gonna look at it from a Bradford Tax Institute perspective, because y'all know I like to use the Bradford Tax Institute because why? It breaks it down in plain English, allows you all to look at it for those who are on the screen looking at it. And it also allows me to have the support to back it up by the code. So that's why I really like Bradford Tax Institute. They don't sponsor me either. But I'm a proponent here for the subscription. I really do like it. I like it for business owners. I like it for people who want to have a basic understanding of tax. I think it does a great job of breaking it down so that you can have the best of both worlds. And if you want to figure out and dig down into the code, they do a decent job of doing it. So I like Bradford Tax Institute, and that's why I bring it to you from topics for us to talk about on this podcast when I'm not interviewing people. The other thing we're gonna talk about just briefly, hey y'all, hey y'all, hey y'all, for those who are using Venmo, PayPal, Cash App, uh, Zell's not on a list right now. However, y'all know what was supposed to happen was we were supposed to be getting 1099Ks. And some of us will still get 10. Let me tell you, some of us will still get 1099Ks. But all the peoples were supposed to be getting 1099Ks. Unless you were using like the friends and family option, right? But if you're using it for business, you're using it just like it's a merchant account. Let's just talk about it. You're using it like it's a merchant account. I encourage my clients, my business clients, I don't care if you just started yesterday or you've been in business for a while. If you are accepting these modes of payment, which are very, very common nowadays, my suggestion is that you make sure that you open a business account. That's a clean way to do it. Just separate. I'm all about not commingling. I'm all about separating business from personal wherever we can do it because it makes it easier. Even if you take forever to reconcile all your books or to account for all your transactions for the year when you're trying to do your bookkeeping over after the Christmas holiday because you know you're going into tax season, I'm just telling you, keeping your business stuff separate from your personal stuff does things twofold. It makes it easier for you to be able to get your documentation together so you can file your taxes or have somebody file your taxes. And number two, it keeps your stuff squeaky clean when it comes to auditing. I don't know no other nice way to say it. Because if anything look halfway suspicious, if it smells suspicious, if it appear like I told y'all before, from an auditor perspective, we always are like appearance, how it looks in appearance and in fact. How stuff look, y'all know we make a lot of assumptions. We do a lot of stuff on the internet, and if it seems like that person guilty, then they guilty till proven innocent and not the other way around. This is exactly the same thing when it comes to commingling. It may be a legitimate business purchase, but if it looked like it might be personal in nature and somebody got to start digging, as an auditor, they're going to disallow it. And you're going to have to do a whole lot of proving to get it so that it's not disallowed. Now, some of the easier ways to keep these things clean is to get different accounts for this stuff. This is the same thing, like for an Amazon business account or a Costco account. Like when I go in Costco, I will do certain things on a business card, and then I'll put the thing, and if it's personal, I separate the two. So I got two different receipts. It just makes it easier. So that way I ain't guessing down the road. What did I buy? How did I do it? Of course, yes, you can keep the receipts, but sometimes them receipts be in my purse and they be getting smudged. I'm not gonna lie and tell you I automatically pull my phone out and be taking pictures with the stuff. No, I just be trying to go in Costco and be like, oh my God, this is like Christmas in heaven. Okay? And if I get there when the samples, I'm ecstatic. Right? So when it comes to the Venmos, the PayPals, the even a Zelle, right? Making sure that you can pull those reports, those cash apps, make sure that you have a business account because it makes it that much easier to know what transactions happened and what they were for. And definitely put memos on it. I can tell you so many different times, like between 2022 and how stuff looks like for 2023 for my clients, I will tell you, put them memos in there for what it's for. Definitely put the memos in there for what it's for. Even, I'll give you an example, even when I Zelle from my business account to a personal account, I automatically, or vice versa, I put down that it's a distribution in the memo. I truly do, because I don't want to be guessing down the road what it was for. It just makes it that much easier. It makes it that much clearer. Okay? So the dollar threshold is not $600, and all these payment facilities do not have to report Because remember, in 2022, we were supposed to push everything. If it was $600 or more, everybody's getting a 1099K. And people were freaking out. And then it was like, okay, we'll wait till 2023. But then they pushed back because they got some good lobbyists. Let's just keep it real. They got some good lobbyists. And so now what's happening is the dollar amount is pushing forward, and then we're waiting. So 2024, they not sending out 1099Ks for that. Some of y'all will get 1099Ks. But if it's over certain dollar thresholds, and a dollar threshold amount is now $5,000. I ain't gonna lie, because when they were saying $600, like who wanna have all that paperwork? Who at somebody's job pushing all of that and making sure that it's right? The key for this, for anybody who was using these mechanisms for business, first and foremost, you need to be tracking your revenue anyway. You should have accounted for it anyhow. It's revenue from any source derived. That's revenue into your company, okay? It's money that you should already be accounting for. Keep track of what those dollars are, because we rely a lot on technology and systems being right. And this is why reconciling your bank statements help. Because that way you can be like, did I get paid this? Or is this overstated? Are my books overstated? Are my books understated? Sometimes we paying too much on taxes because if we're using QuickBooks and stuff like that, we're taking it at face value. And I find that a lot of people aren't doing reconciliations to make sure that they're not duplicate. There are no duplicate transactions in their register. That's a whole nother topic for a whole nother day. But you don't want to be double counting stuff, because when you double count stuff, right, and you double count those balances, or those transactions, you are overstating your revenue, meaning you're reporting too much. That's all. You're reporting too much. And you don't want to be reporting on money you did not receive or not entitled to receive, depending on your method of accounting, cash versus accrual. Okay, so that's what we have. The two topics, I hit on it. Venmo, Cash App. The biggest thing is, hey, be on the lookout for a 1099K if it's in your business account and you hit over certain dollar thresholds using those mechanisms. You should have got them anyway, right? You should have. You should have gotten them. But if not, and you are still using your personal because you think you're getting away with some stuff, stop. If you're doing business, just open a business one. They got Venmo got business option, Cash App got a business option, PayPal got a business option. Open up the business option. Keep your personal separate from your business. All right, that's my little rant with us getting started. Before we go in here and I share the screen and we make sure that we talk about fencing. All right, so I'll hit it. It's not going to necessarily be audit and all, but we're going to just go straight into balancing the beat. All right, y'all, let's go straight into it this week. All right, so I told y'all, Bradford Tax Institute, businesses and rentals existing on January 1st, this is 2024, trigger FinCEN filings. That's that BOI stuff. I call it FinCEN because the office that's doing it is Financial Crimes Enforcement Network. It's a department within the Treasury. Okay, so that's why I call it FinCEN, because that's how I remember it. What department, what agency, and that's the former federal government auditor in me. Who doing what? What agency? What's the act? What is it under? I call it FinCEN. You will hear people call it BOI, and the reason why they're calling it, let's scroll up. The reason why they're calling it BOI is because of this right here. Beneficial owner information. That's the report that they're looking for. So you'll hear FinCEN filings and you'll hear BOI filings. They one and the same. Okay? They are due before January 1st, 2025. But nobody can report anything until January 1st, 2024, because it don't even open up. Those of you who are on my mailing list can see I took you directly to the link where the pages with the frequently asked questions, etc. So you can see, can nobody do anything till January 1st, 2024. None of us, except for the government, know what that form looked like. It's just the truth. We don't know what it looks like. We do have an idea of who has to report, who does not have to report, what the penalties are associated with it, and when you must file by. So if your business has been in existence prior to January 1st, 2024, like you're not like, I'm launching my business in January 1st, 2024, then you fall under this situation where you do not have to file until January 1st, 2025, and it'd be a problem. Let me say that a different way. You got a whole year. If your business is already in existence and is reported, you have a whole year to report. I would suggest you do it sooner rather than later, but you got up until January 1st, 2025 to do this. If you are just now, you know what, I got my ducks in a row and my gift to myself is in January 2024, I'm launching my business, you got 30 days. That's the difference. So if you launching your business and registering and you're opening it in 2024, you have 30 days from the date of registration or launching, right, to actually go in and do this. But they gave us a little bit more time for those of us who are already in existence with our businesses. Okay. Let's talk about penalties. To make sure you're paying attention, the government has put in place severe penalties for non-compliance. So this ain't a tap on the wrist, right? Civil penalties of up to $500 for each day that a violation continues, capped at $10,000. So you're going to be capped out at $10,000, but if your business is already in existence, any time past January 1st, 2025 that you didn't put your stuff in a system, you got a $500 penalty. Just go ahead and mark it, right? So like when y'all filing y'all taxes, get the link, go ahead and fill out beneficial owner information. That's just gonna do it. All right. Potential criminal penalties include imprisonment of up to 2 years for any person who willfully on purpose provides or attempts to provide false or fraudulent beneficial ownership information or fails to report complete or updated beneficial ownership information. Now, the government gives you 90 calendar days to correct any inaccuracies. Okay? So if you're not doing it intentionally, you got to wait. Oh, snap, I put the wrong address. I put a 1 instead of a 0. I left out an L. I messed up that person's social security number. You got 90 days to make the corrections. Okay? All right. So now, now how this going to go? I don't know. How many existing businesses and rental property owners? That's some news, y'all. Let me sip this juice. How many existing businesses and rental property owners will be affected by this new federal filing requirement? About $32 million. I wish it was that. About 32 million filers. Okay? So, those who doing Airbnb and all that kind of stuff, short-term, long-term rentals, you got businesses out here. You need to file. You're going to have to cough up who owns those businesses in the treasury system. Now I'm going to pause here. I will say this, and I have said this in my weekly email. The thing I think is very interesting is that if you are filing your taxes already, they already know who owns the business in most cases. In a lot of cases, they already know. I'm just going to table that. Congress enacted the Corporate Transparency Act in 2021 to help prevent the use of anonymous shell companies for money laundering, tax evasion, and other illegal purposes. Currently, most states allow corporations, LLCs, and other business entities to be established without revealing the identities of the true owners. All right, so this is a great strategy. You see it out there. Wyoming is a good state. Nevada. There are some states that let you mask. And I'm not going to lie to you. I'm here for masking. Not that I'm saying I did all that with my stuff, but I'm here for masking who owns it because it's an asset protection strategy. And there's no problem with having an asset protection strategy. The interesting thing is that even in these asset protection strategies, right? Because you can do some of them same things with trust and things. You still like you still if you filing tax returns, they know who signed the tax. They know who owned it. Somebody got to report it. If you got reportable income, somebody got to report it. Now, I'm not going to tell you that does not mean that people are not out here money laundering and doing tax evasion and things of that nature. Yeah, they doing it. Yeah, they doing it. We saw people making up whole companies during the PPP era. It does happen. But I want to say most of the time, people trying to do the right thing. Now, everybody don't file on time. Everybody does not necessarily. There are people who have not filed for years, but this is a way to cut back and be like, hey, we know what we know, what we know, what we know. And y'all know we know what we know. So y'all gonna tell it. And we gonna have it in the system. And some of this stuff gets captured in the census. And if you're doing your annual reports for your state, your respective states, they know that information as well. Okay? What's going on? The Corporate Transparency Act puts an end to those hidden identities. I just want to say on so many different levels, Congress, I think you're interesting on so many different levels because we can have this Corporate Transparency Act. It'd be interesting to see how many people in Congress this impacts as well. Just saying, not saying. I have no proof. I just think it's interesting. The CTA requires businesses to file a BOA report, BOI, that's beneficial owner information, with FinCEN, listing the names and contact information of the human beings who actually own or control the company. So if you got an LLC that own an LLC that own an LLC that own an LLC, they want to know the people that it drills down to. That's all that says. That's Patrice paraphrase. That's all it say. Okay? This information will be placed in a FinCEN database for use by federal, state, and foreign law enforcement, the IRS, national security agencies, and financial institutions. And all in all, we giving up all our business that they already have. I'm going to sip again. The database will not be available to the public, we hope. For example, private creditors can't access it to collect debts and against the owners of LLCs and corporations, and it will contain no financial information. It won't contain any financial information. It is only asking for names, addresses, social security numbers, and a driver's license or a passport or something like that to support y'all. I can tell you that. That is what it says. That's what it's asking for. It's asking for individual information. The government gonna know. Let's hope. Let's be positive. I'm not gonna do it today. I want to so bad, but I'm not gonna do it. Is your business or rental property subject to the Corporate Transparency Act? The basic rule is that the Corporate Transparency Act, CTA, applies to businesses that are formed by filing a document such as articles of incorporation or organization with a state secretary or state officer or similar official. This includes LLCs, corporations, limited partnerships, and limited liability partnerships. Okay? The CTA does not apply to sole proprietors because no document needs to be filed to legally establish a sole proprietor. You simply start a business as yourself, right? But there is an issue. The CTA does apply to a single member LLC, which a lot of people are, even though you are taxed as a sole proprietor, disregarded entity. It's because you registered your entity with the state that you are under this envelope. Okay? The reason you file a document with the Secretary of State, right? That's really what it is. It also does not, the CTA also does not apply to general partnerships, except in a few states such as Delaware, where general partnerships must make a state filing to come into existence. Such a filing is optional for California, but if one is filed, a BOI must be filed. The CTA also applies to foreign corporations, LLCs, and other entities that register to do business in the U.S. The foreign business entity filing is ordinarily done by filing a document with a Secretary of State. So this is the thing. This is why I say what I say. They already know. Now, places like Wyoming, Nevada, where you can actually mask who owns it, that's different. Somebody know who own it. Now they want to know. Not like they don't, because you file a tax return. Somebody, an officer, I'll say this. An officer, if you got to file a tax return, and even if your entity is in a mass state, an officer from the entity got to sign. So they at least know one of the officers. They just want to know all the officers. All right. Who's exempt? Larger businesses. If you have more than 20 full-time employees, $5 million in domestic gross receipts or sales on a prior tax return, and a physical presence in the U.S., you don't have to do an exempt business. Woo! Amazon. Ain't y'all lucky? Inactive businesses. You don't need to file. Amazon, Microsoft, those are some big companies. Why? And I'm gonna tell you why part of that is. Cause y'all like, why they don't have to do it? Why? Like, it's gonna be a whole Donald Trump didn't. Those companies are reported on the stock exchange. I said it to be funny. So when I said, ooh, Amazon, right? Aren't you lucky? I said it to be funny. They have to report to the SEC. Those like real big businesses that are being traded on the stock exchange already have coughed up all kinds of information. Their stuff is public. It's on their website. Under shareholder information, investor information, they have to cough up a lot of information to be in compliance with the SEC. SEC regulations are a lot more stringent than this right here for the time being. I'm gonna say for the time being. So when I said it, I truly was just being comical. Anybody was like, she don't know what she's talking about. No, I'm fully aware. The reason why they're not on here is because they have different requirements that they got to follow. And rightfully so. Rightfully so. They have a whole different caliber that they got to meet up to, whole different set of rules they got to meet up to when it comes to being traded on the stock exchange. So I'm fully aware of that. In active businesses, you don't need to file a BOI if you form your business before 2020 and is now inactive. So you're not doing what you're supposed to do with your business, right? You just not doing the things. I didn't mean to do that, y'all. Here I go, making stuff small again. Okay, we gonna go with that. I'm gonna stop touching stuff. It's not actively engaged in business. So you got an LLC that's been sitting out there, it's been forfeited, the state know about it, or you did something with it, or you registered it, but you never did any activity in this business, then you don't have to file a BOI. You can't be engaged in active business, is not owned by a foreign person, hasn't experienced any change, has not received more than $1,000 either directly or through any financial account in the past 12 months, and does not otherwise have any assets in the U.S., but it has to have been in existence before January 1st, 2020. If it's inactive, you're exempt. And heavily regulated businesses, this is why I was being funny, right? So it doesn't apply to publicly traded corporations like Amazon and a Microsoft or a Meta or anything like that, because they are regulated and registered by the SEC, and the SEC regulations are way more stringent for the time being than what has to be done with this. All right, so now what has to be reported with this FinCEN stuff? Legal name of the beneficial owner, their date of birth, where they currently reside, a driver's license number, and provide an image. So they're gonna know who you are. Like, you need to match your name, like you coughing up all your information, right? For closely held companies, especially those owned by family members. Now, this is where it gets important for our mom and pop and smaller businesses, which most of America is. Obtaining the personal data should not be difficult, but for companies not owned by family members, some beneficial owners might not be willing to provide their personal data to the company. In this event, they can register with FinCEN directly and obtain a unique identifying number by submitting their personal information directly to FinCEN. The reporting company can report the FinCEN identifier number instead of the individual's personal information. Okay? You'll file the BOI report online at a new FinCEN database, which is not available. It does not open until January 1st, 2024, called BOSS, Beneficial Ownership Secure System. Filings cannot be made until January 1st, 2024. There's no filing fee. Who are the businesses business say that 25 times fast. Who are the businesses beneficial owners? The humans who control at least 25% of the ownership in a business, or they have substantial control. So if you're making business decisions, financial decisions, and they have a whole chart in this in the FAQ that talk about this, and you own 25% or more of the company, you are a beneficial owner. Here are the exemptions: minor children, individuals acting as nominees, employees other than senior officers, heirs of company owners, creditors, and this does not count. Like if you're working with a CPA or anything like that, they are not a beneficial owner of your company. Your company's BOI report never expires and never has to be renewed, but you do need to update it within 30 days if anybody comes off the company as a beneficial owner or you add a new beneficial owner. Okay? For example, if you have to update your BOI report, if your residents change, if you add a new person, they got to be reported within 30 days of those changes. All right. There are some examples in this. The biggest takeaways are as follows. The Corporate Transparency Act goes into effect on January 1st, 2024. That's right around the corner, y'all. Non-exempt companies formed in 2023 and earlier must file a beneficial owner information report within FinCEN, the Treasury Department's Financial Intelligence Unit. The BOI report must be filed between January 1st, 2024 and December 31st, 2024, or else you're going to get a penalty of $500 a day. Okay? Companies subject to the CTA include corporations, limited liability companies, limited partnerships, and other business entities formed by filing a document with the Secretary of the State. Foreign companies that register to do business in the U.S. must also comply. Certain types of businesses are exempt from the CTA, including those with 20 or more employees and $5 million in annual income. Specific type of heavily regulated businesses such as publicly traded companies, Microsoft, Amazon, etc., are also exempt. The BOI report must disclose the identities and contact information of all the entity's beneficial owners, the humans. Y'all notice he keeps stressing humans who either control 25% of the ownership interest in the entity or exercise substantial control over the entity. Companies have an ongoing duty to keep the BOI report up to date. They must report any changes within 30 days. All right, so that is the biggest summary, and then y'all will see, this is why I love it, all the code, where it came from, Code of Federal Regulations, the section in the U.S. Code that it belongs to. I know that's tiny, 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 y'all, because I'm wearing these glasses, but really that's what we need to know. That's truly what we need to know, okay? Is that, hey, FinCEN is here. It's not going away. It's like AI. It ain't going away. It's here to stay. Make sure you know where to go. There is no fee to file it, but in order to make sure people do it, if you do not file by the times you're supposed to, there will be fines. And don't nobody want to pay $500 a day. That's why it's so steep. Let's just whether we agree with it or not, whether we have our thoughts or not, let's just do it. Let's just get it done. Let's just be done with it. Okay? Um that's where we have for fencing, because I know it's a topic that's been coming up. Like I said, we're doing it. We have a 3-week series that we've done by mail. And so I'm just gonna hit it and quit it on a podcast this week so we can talk about it. We don't have any audit and all. We don't have any fraud squad funnies. It's just my thing is I really want you all to be in compliance. Y'all hear me say it all the time. I really do want you to be in compliance. These are the two pressing things: the whole Venmo, PayPal, etc. Change that happened right after Thanksgiving, and the push for everyone to truly be aware of fencing. So now fencing has been this Corporate Transparency Act has been around for a while. The implementation got real heavy. The discussions got heavy about this time last fall last year. And now we're talking about implementation and how it's going to all go down. The beauty behind this is acts, Congress passed stuff. They got to figure out who's going to be responsible, what department going to be responsible. And then they got to talk about implementation. You will, for the tax cop, an act will come out and I'll be like, okay. But because I used to work in the government, I really only really start like being like, ooh, let's start talking about it once we know what department is going to and the implementation. I really care about implementation. The reason why is because I spent 16 years at DOD, 5 years at the Department of Commerce, and I always had to be aware of, okay, well, what's going to be in our National Defense Authorization Acts? Who's getting what? Where's the money going? Who's being responsible? Did they implement the program? How can I audit the program until I know what the rules are? Like a lot of times we would just be, oh my gosh, this is a hot topic. But if the group hasn't been put in place or the rules hadn't been in place, everything had been outlined, then there's no need to go audit something, right? Because auditing, we're going in as auditors for checks and balances. And so that's really me. I really am like, okay, it's on my radar. I have it flagged in my little folder. Who's getting it? Okay. Department. Okay, so well, who did they say has to fill stuff out? Okay. Well, what's going to be the implementation? How are they going to monitor? When they going to start this? And so that's when you'll hear me start talking about stuff. Once it's definitely set in stone and we know how the implementation is going to go, that's when you'll hear me talk about stuff. I do see it reported out quite a bit in social media. I'm not blind to it. It is not necessarily a piggyback type thing, but because the auditor in me really wants to understand how it trickled all the way down and how it's going to be executed, that is why I'll be slow to report on it. But I think it's wonderful. Like I said, I've been doing a 3-week series. We on part week 2. I recorded it for my weekly tax tips clients already, but I think it's pretty groovy. Like I said, I love Bradford Tax Institute. I love the take on it. I love the fact that it's in plain language. I love that it's backed by the code. And so because it came in our newsletter for December, I could not talk about it because I like to share somebody else's perspective, break that thing down in a way and give you a valuable resource to go to besides myself. That's really the 2 things I want to talk about before we close out this week's podcast. It's a lot of uhs and ums. My brain is working on so many creative things, you all, that which is different from me because I'm very analytical, very much, okay, what's the rules? Let's break this back. Let's follow this. Let's follow the money trail. I'm an extreme, like I can be spontaneous. I don't call myself necessarily a creative at all. I can be creative. I'm goofy more so than anything else. I'm more goofy, but I'm very analytical, very much want to understand it from the top so that I can actually develop strategies so that I can leverage. I'm strategic in that manner. I'm looking for ways to leverage things to see I told y'all I don't cross the line. I'm not a habitual line crosser, but I'll tiptoe on the line like ain't nobody business. I'm good for tiptoeing on the line. So I really want to know the changes that are happening. Retirement is heavy. This is a heavy topic. Um, Foreign interactions, us becoming more global, is very heavy. Um, just really trying to anticipate where things are going in this industry and reminding everybody that taxes is how you end up telling yourself. Taxes is what trigger audit. What you report on your tax, that's the better way. What you report on your taxes is what triggered audit. It's what triggers an audit. So that leads me to, let me take the time to love on you. I ain't even put my name up here. I just want to break this down for you all. Especially for my business owners that have financial statements. Or for my business owners that are using spreadsheets or not recording stuff until the last minute. There's a major difference between what ends up on your financials and what's reported on a tax return and where it's reported. So for my S corporations, C corporations, pass-through entities, LLCs, partnerships, sometimes especially for my partnerships and my S corporations, sometimes information that is clearly an expense for the business does not get reported on the business tax return. That's the partnership or the S corporation. However, it does not mean that it does not get reported on the tax return. It may end up on your personal tax return, depending on the number of shareholders or partners in an entity. Making sure that that information is not mixed in, right? Commingled. Making sure that we keep business separate from personal is critical for that. In some cases, you can do certain things that are personal, right? We can either record them on an accountable plan or they'll be considered a distribution of some sort. But we need to be clear as to what those things are. Every time you swipe the card does not make it a business expense. I think that's the biggest thing. Making sure you not only understand how taxes work, but really understanding how to read financial statements is going to be a big game changer. Those companies, I've actually tasked some of my clients to go and pull a company that they really like and go look at their financial statements. Not to invest or anything like that. If you invest, that's your business. But really to understand what those financials show and look at theirs in comparison. For my business owners, I have started giving them this homework because it changes your mindset. These companies that are traded on the exchange have got to report and be very transparent about what's going on in their company. Now, whether they do it all the time or not, it's totally different. Read the notes, read the prospectus, like read it, like sit on an earnings call. That's a whole different conversation. However, the presentation of the financials opens people's eyes because a lot of times as mom and pops, as small businesses, we only think about the income statement. But there are things that you swipe your card for that do not end up on the income statement. They end up on your balance sheet. And it's critical. Or there are certain transactions that are split between your balance sheet and your income statement. And so one of the most crucial skills I would say that business owners need to know is how to read financial statements, whether it's their own or somebody else's. Because understanding and reading a financial statement will teach you a lot of things and to question a lot more things, especially in your own business. You'll be able to make decisions by looking at your financial statements. And the other thing to consider is that you won't be and should never be shocked about whether or not you owe taxes, even as a business pass-through entity. The reason why is because If that bottom line on that income statement is positive, we got to cough up some money. If it's negative, the company has a loss and we need to figure out what that loss is from. And we're not paying taxes on losses. We're not. But depending on our entity will determine whether or not we are taking that loss in this year or in another year. About to speak in tongues, right? Net operating loss that we carry forward to offset any other kind of income we had. It's crucial that we start to get some financial literacy. It's crucial that we understand that the difference between reporting information and it being taxable. Because I'll use qualified dividends, right? As an example, that's passive stuff, but I'll use it. If you look at the tax return, there are times where you have to report the information, but all of it may not be taxable. You'll see the same thing with pensions. You'll see the same thing with Social Security. You'll see the same thing sometimes with selling of property, right? Because that deals with gains. It's reportable. And I want y'all to understand, this is why I started with the Venmo, PayPal, Cash App. This is why I'm focusing on fencing. Let's not act like they don't know. Let's not act like the government, the federal and the state do not know. Because I keep telling y'all, W-2s, 1099s, those documents, those are snitch documents. They know how much money you made. Why? Because it's a requirement by January 31st of each year to have turned in 1099 Rs, Ks, NECs, W-2s, etc. 941s. Like we got to do stuff by certain deadlines. So it's not like the tax agencies do not already know. So when you're wondering why you're getting audited, when you're wondering what's triggering stuff, what's triggering it is taxes. Now, that don't mean hate taxes. That just means to be aware of taxes as part of the game. And this information is being reported out. And they're basing whether or not they need to review or dig deep in your stuff based on what was reported to them. This is where it comes in. And this is why I say it's crucial that us as Americans, as business owners, as employees get financially literate. Because that does not mean that what was reported was always accurate. You got to keep your own good records. Just because it's income does not mean that it can't be offset by some sort of deduction or expense. For business owners, deductions must be ordinary and necessary to the operation of the business. It's on you. The burden of proof fall on you, not on the taxpayer, on you, the taxpayer. Let me say it right. The burden of proof falls on you, the taxpayer, not on the tax preparer, to get it right. That's why you signing your name. So you got to support whether or not that deduction or that expense was ordinary and necessary to your business. I say make that thought before. This is why we want you to keep stuff separate, because it makes it so much easier. You make that decision. And you decide, hey, if they were to ever ask me questions on this, am I willing to fight it? And how far am I willing to fight it? We need taxes to run this country. Y'all know we in debt. They got to get the money from somewhere to pay it back. We got inflation going on, groceries high, like everything. People losing their jobs. It ain't easy. It's not. But we got to get smarter. We have to say, even though I'm not great in this area, maybe math ain't my thing, I do need to understand some financial basics so that I can survive. Learning how to read financial statements, crucial. Understanding what's reportable and what's not, crucial. Understanding the basics of how to read your tax return and what's being taxed and what's not, crucial. Making sure your W-2 and your 1099 is correct, crucial. I'm not asking you to do what I did and go to school for 4 years and then do continuing education, go get a master's degree, do in taxation. I'm not asking you to do any of that stuff. Because even with my schooling, I had to come out and teach myself and ask myself some questions. And it started with reading Rich Dad, Poor Dad, and then going to Cash Flow Quadrant and being like, do you really understand money the way you think you understand it? And a lot of us going to be honest. No, I know how, I think I know how to get some. I think I know how to spend it. I definitely know how to spend it. Okay? I just want us to be better. I want us to be smarter. I want us to pass forward these type of conversations. I want us to not be afraid to have these kind of conversations with our family members, especially our children, whether we're talking about them being in digital currency or not. The world is changing. And for us to be still at a huge divide where some of us understand how to play the game and how to leverage taxes and how to leverage money and how to leverage businesses and how to leverage investments and others not, does not make sense. Especially in the information age. You ain't got to know it all. You don't. You don't got to have an accounting degree. Find somebody who's willing to teach you and break this stuff down, though. Go and learn just basics, personal finance basics, and stop mixing business and personal. Like, really starts to shift your mindset so that they operate different, because it'll be liberating. It truly will be liberating. It really will. And so with things like FinCEN, with the stuff going on with Venmo, PayPal, Cash App, I want y'all to pay attention. We got to pay attention, because it ain't just about us. We got to pay attention. We got to listen to what they're doing. We got to understand the rules and regulations that are happening to us, because it's happening with our eyes wide shut. And we have a mindset that, hey, what's going to happen anyway? What happens if we can start to control some of what can happen to us and what can't? I'm just going to leave it there. I didn't want it to get so deep. Like, I feel like there's going to be some music playing in the background. I feel like it got a bit deep. I want y'all to know more tax notices are coming at the federal and state levels. They got to get the money to pay. Like, we got to get stuff. More people going to lose their jobs. It's just going to happen. It is truly going to happen. Interest rates going up. We ain't going to be able to pay stuff. People going to be in default for more and more stuff. You're going to be like, well, what am I working for? You're going to get frustrated before you get happy again. We got to get this stuff in control. And it's on us to do better across the board. And just understand this just better. Understand what's coming. I don't want nobody to have no $500 penalty a day of $10,000. No. So let's get in front of it. Mark your calendar. You know who applies and who doesn't. If you don't, let's go to the websites and go figure out if it applies to us or not. Let's not put our head in the sand and hope it doesn't. Or hope somebody else takes care of it for us. Because at the end of the day, when it comes to taxes, I'm telling you, it still falls on the tax preparer. Don't care who, taxpayer. I get the two, taxpayer. Because I prepare and pay my own, right? Taxpayer. And they already know. I'm going to say they already know 95% of your business because it's already reported. They at least know your income. It's on you to be able to know what you can deduct and what you can't. And if you don't know, it's on you to go find somebody who's willing to educate you legally. Let's stop doing these illegal stuff and hustling and crossing the line. Just tiptoe on the line. It's enough laws in the tax code for you to be able to tiptoe on the line and then learn how to pay your fair share. That's all it really is. I'm going to tell y'all the truth. Y'all know my goal. Those who listen, for me, the goal of taxes for anybody is to break even. Break even for me is you either owe $1,000 or you get a refund of $1,000 or less. Let's learn how to get more of our money legally throughout the year. And if we're gonna borrow their money, let's make sure we in control of what that borrow looks like. All right, that's so solemn. I didn't end on a. I really do care about y'all. I really do want y'all to win. We're gonna do some upbeat podcast for the rest of the year because this ended up like wah 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 wah. Like it wasn't good. It wasn't it, great information. My delivery might have sounded like doom and gloom. It's not. I just want to admonish you all. I care about this so much. I care about us doing better and I care about us getting more educated in this area because it's crucial for you and it's crucial for your kids to understand what's coming. Nobody likes to have big bills. And a tax bill that continues to earn interest and penalties for 10 years plus, you don't want it. You don't want it. I'm watching people have it. You don't want it. You don't want it. I promise you, you don't want it. It's crushing. It can take the oxygen from you. You don't want it. And I don't want that for you. All right, so that's all I got for you. This is your girl, Patrice Elberry. This is the Tax Cop. This is Talks with the Tax Cop, episode 15? 15. And we're going to knock out some more episodes for you for the rest of the year. All right. And going into 2024, y'all, how did we get here? 4 or 5 weeks before we get to 2024? How did we get here? Y'all have a great week. Until next week, y'all take care. Mwah.